Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 11th, 2025, and we're diving into the latest earnings report from Kestra Medical Technologies, a leader in wearable medical devices. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kestra has just released their second quarter fiscal 2026 results, and there's a lot to unpack, from impressive revenue growth to strategic initiatives that are shaping their future.
Revenue and profitability overview. Let's start with the top line. Kestra Medical Technologies reported a revenue of $22.6 million for Q2 FY2026, marking a 53% increase compared to the same period last year. John, what are the key drivers behind this growth?
Absolutely. The significant revenue growth is primarily driven by an increase in market share and the expansion of the wearable cardioverter defibrillator market. Additionally, Kestra benefited from a higher mix of in-network patients and improvements in revenue cycle management. The gross margin also expanded to 50.6%, up from 39.6% last year, thanks to volume leverage and a favorable patient mix.
Despite the revenue growth, the company reported a net loss of $32.8 million. Can you explain this?
Yes, the net loss is largely due to increased operating expenses, which rose to $43.2 million, including $1 million in non-recurring costs. These expenses are tied to Kestra's commercial expansion and public company costs, which are necessary investments for future growth.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 56 for this quarter, but Kestra reported an actual EPS of 64 cents. John, what does this mean for the company?
This slight miss on EPS indicates that while Kestra is growing its top line effectively, the costs associated with that growth are impacting their bottom line more than expected. The increased expenses, particularly in selling, general, and administrative areas, are a key factor here. However, it's important to note that these are strategic investments aimed at long-term growth.
Strategic initiatives and future outlook. Looking ahead, Kestra has increased its fiscal year 2026 revenue guidance to $91 million, which represents a 52% growth over FY25. What are the strategic initiatives driving this optimistic outlook?
Kestra is focusing on expanding its commercial organization and growing the wearable defibrillator market. They recently announced compelling results from their post-approval study, which should bolster their market position. Additionally, the company fortified its balance sheet with a $148 million equity offering, providing them with the capital needed to support these initiatives.
That's quite a robust strategy. How do you see these initiatives impacting their market position?
These initiatives are crucial for Kestra as they aim for category leadership in the wearable medical device space. By investing in their commercial capabilities and leveraging positive clinical data, they are well positioned to capture a larger share of the market and drive sustainable growth.
Key takeaways. In summary, Kestra Medical Technologies has delivered a strong quarter with impressive revenue growth and strategic investments for future expansion. Despite a slight miss on EPS, the company's outlook remains positive with increased revenue guidance. Thank you, John, for your insights.
Thank you for having me. Kestra's focus on strategic growth and market expansion is promising, and it will be interesting to see how they execute these plans moving forward.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Kestra's performance in the comments below.